All of you just saw Bitcoin take a 30% nosedive, dropping all the way down from 80k from the highs of 125,000 just a couple months ago. The headlines are screaming crypto crash, and all of these other smaller coins, the altcoins, they are down more than 50%. If your portfolio suffered from this crash, you want to hear what I'm about to say next. And even if you're not yet invested in crypto, you're probably thinking, is this the opportunity I've been waiting for to get in at good prices? So what if there actually was a way to step into this crypto chaos strategically? A method that lets you take a calculated approach at the massive growth potential that crypto offers over the next decade, but without exposing yourself to the crazy volatility that is inherent to crypto. Stick with me because I'm going to show you the exact portfolio strategy I recommend. This isn't about gambling. This is about building a real sustainable foundation for your crypto portfolio. As you can see, crypto has been a sea of red. That means that most portfolios are down at least 30 to 40% over the past 2 months. And that is if you have been allocating smartly and mainly been in Bitcoin rather than an altcoin heavy portfolio. And this major panic that most investors are down by that much compared to, their portfolio size during the highs at beginning of October, end of September, this shows that we have had a massive shift in the fear and greed index to massive fear in the market. This chart is now a couple days old, but we can see that it has entered this red territory beneath the 20 index number. This always signals massive fear in the market. And overall, the fear and greed index is a great indicator because it tells you exactly where the market is when it comes to overall mindset. And this is important to understand for your crypto journey because crypto moves a lot based on fear and greed. And this is what you have to understand as investors. There are extreme highs and extreme lows in crypto. And this just results in massive volatility. If we just look over the annual returns here for Bitcoin and for Ethereum over the past 7 years, there were massive years with 100% or more gains, but also massive drawdowns of, minus 60, minus 70, even minus 82% for Ethereum in a single year, which is absolutely spectacular. And a lot of people misunderstand the volatility because the highs do come with lows. This scenario is actually hindering a lot of people to get invested into crypto because they fear that they will enter at the time where there's going to be this massive drawdown. And on the other hand, experienced investors are also caught off guard because they miss selling their crypto during the bull run, then end up stuck with, worthless tokens potentially after the end of a major bear market. The price action that we can see here, or the returns, is a reflection of the common market psychology. Of course, global macro conditions generally drive a lot of these, longer term market trends. And I made a complete separate video breaking down the global macro factors influencing crypto. But what is not to be misunderstood is that the overall market sentiment, that difference between major greed and massive fear, also makes a huge impact on short-term price action and massive crashes. And the consequence of this swinging of market emotions is that a lot of crypto investors actually end up losing money because they sell right at the bottom and buy right at the top, or miss selling their crypto for profits right at the top. This is not something you want to do as an investor. And there is a way of how you as an investor can mitigate and reduce that volatility drastically and protect your downside while maintaining the massive upside potential. And in order to understand that theory or that method, we just need to rethink the tradition. Almost every portfolio or every fund manager will tell you that your portfolio should consist out of a basket of stocks which bring growth and government bonds which bring stability and income to grow your portfolio during the times when stocks are not performing well. And if we just rethink that tradition and apply it to cryptocurrency, we come to the core and vault method, which is the method that I'm teaching in Beyond the Market to grow your crypto portfolio sustainably, again, protecting downside while still having massive upside potential. And with the core and vault method, we basically combine strong core crypto assets like Bitcoin, like other layer 1 coins like Ethereum, Solana, and other outperforming altcoins. Within the core and vault method, we as smart and thoughtful investors combine high growth, strong assets in crypto like Bitcoin and layer 1 coins like Ethereum, Solana, and any other outperforming altcoin with a stablecoin vault, which protects our downside, which gives us firepower during crashes to invest into the market, and also generates outstanding passive yield to grow your portfolio whenever there is a downturn in the market. This basically means that you have to rethink your portfolio allocation as a crypto investor, because if you look online, any crypto guru will only talk about, the next altcoin that will do a 10x or a 100x. But this frankly is just like buying a lottery ticket. There's no guarantee whatever coin will do a 10x, because there are coins that do a 10x, but it probably is 1 out of 1,000 new coins that get launched every single day. However, in Beyond the Market and on this YouTube channel, I'm preaching institutional grade investing frameworks and portfolio allocation. And that's why in my own crypto portfolio, I look at these 3 major pillars to optimize for growth. And this is stablecoins, Bitcoin, and altcoins. And these 3 pillars make up in different weighting the portfolio at any given time. And this is optimized again for growth and protecting your downside. And if you're new to crypto, you might be thinking, okay, I've heard of Bitcoin, but what the heck are stablecoins? Recently, the Trump administration in the US passed the Genius Act, which actually regulates stablecoins. And here you can basically see that the Genius Act requires a 100% reserve backing with liquid assets like the US dollar or short-term treasuries, and requires issuers to make monthly public disclosures of composition of reserves. What this means in simple terms is that stablecoins are coins you get on the blockchain, such as the USDC or EuroC, which are pegged 1-to-1 to the underlying currency. So basically, you swap $1 for 1 USDC, which is pegged to the US dollar and available on the blockchain to generate yield for you passively. And this Genius Act is actually massively supporting your security as crypto investors, because this requires issuers of these stablecoins, and there are a handful of them actually, to have 100% reserve backing at all given times with stable assets. And this actually increases the stability in the crypto network even further and boosts your security as crypto investors. So you should understand now what stablecoins are and that they're protected. You also need to understand what they're capable of on the blockchain. On the blockchain, specifically in decentralized finance, you see a lot of these screenshots that I just put on here, which are basically stablecoin lending pools where you can lend your stablecoins and earn a very competitive yield on those US dollars, essentially. USDC for 10%. You can see delta neutral funding strategies, which are also conducted using USDC, also with 9.8%, 10.5%. And here you can see USDT with 9.6%. So you can see stablecoins can generate a lot of yield on the blockchain compared to any other traditional investment, especially if we look at treasury yields, for example, which only yield, at the moment between 3 to 4%, while on stablecoins, you can quite easily earn 10% annually, which is a massive benefactor. Because again, remember, stablecoins bring stability to your portfolio because they're stable in value. Secondly, they offer firepower whenever the market crashes significantly, like October 10th, for example. They also generate a very strong passive income in your portfolio to grow it as well. Remember also that these high returns in stablecoins you get no matter what the market does. If Bitcoin is in a bear market, doesn't matter for stablecoins. They will be pegged 1-to-1 to the US dollar. So let's talk about the specific market cycles that we could be in and how to allocate your portfolio. So let's say we are in a boom where the market is in a positive bull market. We haven't reached that very high level of euphoria, and certain indicators haven't hit, so we're not yet at the top, but we are in a phase of the market where there is a risk on appetite. Then you want to allocate only a little portion to your portfolio to stablecoins and have the majority in Bitcoin and select altcoins, versus if you really see that euphoria coming into the market and, the market being at an unsustainable level and indicators, showing us that the market might be overheating, then you want to drastically switch your portfolio up and have the majority of your money in stable coins and only having, a smaller portion still allocated to Bitcoin, but basically rotating the altcoin profits into stable coins or into Bitcoin, because this is what will actually turbocharge your portfolio over the long term. Because if you're able to capitalize on a massive growth year or two in the crypto market, then cash it out into stable coins and Bitcoin partially, and then allocate the stablecoins back into mostly Bitcoin during the correction, then you're ahead of 99% of investors, I can guarantee it. And, finally, if we talk, about recovery after a bear market, generally Bitcoin is the best performing asset. You don't want to get into every altcoin there is, just because their price is low at a certain given time. Always remember that during the recovery, so after the bear market, Bitcoin performs generally the best compared to any other altcoins. So there you also want to have a high Bitcoin allocation, right? You want to have deployed your stable coins into Bitcoins while still having firepower to allocate into altcoins, but having transitioned from a heavy stablecoin portfolio during the decline, again, not after the decline. You don't want to sell at the bottom into stablecoins, but when the market is at peak euphoria, you want to cash out into stablecoins. Once Bitcoin is down, 35 to 50 to if not 60% from the all-time highs, you want to actively dollar cost average again into Bitcoin and grow your Bitcoin holdings with the stable coins that you have cashed out during the previous bull market. And this is exactly how smart investors actually perform extremely well in crypto and capture massive upside while minimizing the downside risk. But having understood the theory behind portfolio adjustments in crypto markets is only the easy part. The hard part is actually implementing it. Being on time with the portfolio transitions, for example, from altcoins into stablecoins during specific market periods is absolutely crucial, because otherwise it can wreck your portfolio. Or if you're too early by investing into altcoins when Bitcoin is still downtrending or in a bearish market, then you're also exposing yourself to massive volatility risk, and that's not something you want for your portfolio. And exactly these transitions with all the in-depth strategy, where to buy and where to sell specific altcoins or stablecoins, where to deploy the stablecoins for the best yield. All of that we're covering in Beyond the Market, which is a crypto investing masterclass for serious investors who want a sustainable and long-term foundation for their crypto wealth. And as a cherry on top, inside Beyond the Market, we have weekly webinars discussing the current market conditions, what you need to do in your portfolio, and what are the best opportunities coming up, in the coming weeks and months. If that is something that you are interested in, check out the link below. There is a link for a free one-to-one strategy session with me personally to discover your needs, your financial goals, and how I can help you with Beyond the Market to invest strategically into crypto to grow your wealth sustainably. With that said, I'm looking forward to speaking to you and see you in the next one. Cheers.